Have you been sitting on the sidelines waiting for rates to come down and you're just not seeing it happening? Well, I may have a first-time homebuyer program that can offer you rates of 4.65, and that's not a teaser rate, that's the actual rate. So if you want to understand how you can get this, what the rules and regulations are, pros and cons, and everything when it comes to this first-time homebuyer program called Hale Kamaʻāina, stick around to get all the details. See you on the other side. All right, guys, like I mentioned in this video, we are going to cover this first-time homebuyer program that just came out recently called Hale Kamaʻāina, which is a first-time homebuyer program that's going to offer very competitive rates as low as 4.65. It's going to offer also sometimes closing costs or down payment assistance, as well as much more. Now, this isn't the best fits all program for first-time home buyers. So that's really what we're going to dive into in this video. So we're going to go over what the program is, what the requirements are, what the pros and cons are, and the fine print that you may not be seeing on some of those other websites or other aspects, places that you're looking. With that being said, before we jump into this, if this is your first time here, let me quickly introduce myself. My name is Patrick Longley. I'm a licensed real estate agent out here in Hawaii and have been for nearly a decade, helping buyers, sellers, investors, and first-time home buyers with their real estate needs. So with that being said, if you have any questions, feel free to reach out to me. Got my contact information right here. You can directly DM me on any of my social media platforms, but I find that the best way to reach us and quickest is click the link down below where you can book a call directly with me or one of my teammates so we can match up with time zones and make sure that it works for both of us and talk about your real estate wants and needs, and of course, answer any questions you have. Now, with that being said, let's jump into what is this first-time homebuyer program known as Hale Kamaʻāina. So the first thing is, let's go over what is this first-time homebuyer program known as Hale Kamaʻāina. Now, this is a program that is backed by HHFDC, which you may have seen in some of those new development places, whether that's in Kaka'ako, they have some in Ewa, but basically any of those new developments where they pair in these affordable housing programs where you can get a property at a lower market, opposed to the market price, you can get it at a lower affordable price when it comes to the actual price. Now, this is more specifically to an actual loan product where you're not stuck in a box of just these new developments at a certain price point. You actually could use this loan product, which can be offering anywhere between 4.65 and 4.95 interest rate, 30-year fixed, around different projects around the island. We'll get into the details of which ones work and which ones don't. Now, with that being said, if you are doing a government-backed loan, VA, USDA, FHA, you can expect to get a 30-year fixed rate of 4.65. Now, some fine print that I'll already knock off right now is that if you are doing VA, you cannot be active. You have to be inactive, you have to be retired. So just keep that in mind. And of course, if you're gonna go the conventional route, you're still looking at very attractive rates, sub 5%, where we're seeing most rates closer to about 6.25, 6.5 right now. So that could save you hundreds, if not thousands of dollars every single month. Okay, the second thing we wanna go over is who qualifies for this program. Well, there's a couple criteria that we need to go over. The first one is that you need to make sure this is a first-time homebuyer program. So you need to be a first-time homebuyer. Now, with that being said, again, there's always fine print. So what do I mean by a first-time homebuyer? Well, in the eyes of the HHFDC and specifically for this program, that means that you could have bought an investment property and it wasn't your primary residence, you're still technically a first-time homebuyer. You could have acquired a property maybe from a family member, and again, if you didn't live in it, then you're still a first-time homebuyer. If you purchased a property but sold it 3 years ago, then you're still a first-time homebuyer. So there's a couple different intricacies that could still make you a first-time homebuyer, even if you're not technically a first-time homebuyer or first time owning a property. So make sure you reach out to us if you want to get all the details, but that's generally the rule of thumb, is that you need to make sure you didn't own a property within 3 years. If you bought or still have an investment property, that's not a primary residence, so that's not a first-time purchase. And again, there is some other gray areas that we can utilize to possibly get you into this program if you do still already own a home. So just reach out to us if you want to get all the details. The second thing is you need to be a Hawaii resident. You need to be a bona fide Hawaii resident. You cannot use this first-time homebuyer program for the local community if you are in the mainland or if you're using it as an investment property. That is a big thing to understand. First-time homebuyer program for the local community. So you do need to be a bona fide Hawaii resident. The third thing is you do have to be a US citizen and 18 years or older. And the next thing is you do have to complete this HUD approved education course, just one of those online courses you got to take. So you just go through that, and then you're pretty much filled the requirements on the first level. So let's go down to the second level when it comes to income restrictions, household restrictions, areas, price points, things of that nature. So the next level down would start with income restrictions. If you're making millions and millions of dollars, even though you haven't bought a home, you wouldn't technically work for this program. You have to fit within the box of what the income restrictions are when it comes to your household size. So as you can see in this chart right here, there are some specific requirements. You need to stay under the median AMI or area media income. income. So as you can see right here, just for an example, if you have a 3-person household, for targeted areas, it's $212,000. For non-targeted areas, it's $174,000. Now, what does it mean by a 3-person household? So if it's if it's you and your partner and you guys have a child, even though that child's not working, that's 3 people that's living in the household. Or if you've got 2 kids, then that's 4 people living in the household. So keep in mind that the more people live in the household, whether they're adults or actually generating income or not, that does push up your options when it comes to how much money you guys can make to fit within the affordable program. And what you'll also notice, which we'll go over shortly here, is that the targeted versus non-targeted areas are going to be slightly different. And the reason why is because it seems that they're trying to regentrify certain areas, which are the targeted areas. So they give you a little bit more flexibility on how much you can actually purchase when it comes to the purchase price, because you have the income limits and then you have the purchase price limits. So then that brings us into the purchase price limits. So there are certain purchase price limits on how much house you can buy. So let's say you fit inside that actual box when it comes to the income limits. Now the next requirement or kind of barriers or guardrails they put on you is that, okay, if you're going into a targeted area, these are areas that we're trying to regentrify, they're going to have a certain amount that they'll allow. And as you can see on the screen right here, this just kind of gives you a brief overview of the different qualifying amounts that you could buy when it comes to those areas. Targeted versus non-targeted. Now also you'll see on there it says Waikiki. That does not cover all of Waikiki. There's only certain slivers. You have to look on the actual map. So if you have more questions about the specific areas, feel free to reach out to us. We can get you that link or kind of showcase the actual areas that are covered, because it's kind of general, as you can see on the sheet, but it gives you an idea of what areas are open that are targeted, non-targeted. What types of properties actually qualify for this program? Surprisingly, single family homes, townhomes, and condos, they all qualify. But you just need to make sure that, of course, you qualify when it comes to the income limits. And then you also qualify when it comes to the targeted or non-targeted areas when it comes to the max price point that you can purchase in this program. So again, there's a lot that you have to get through to possibly get that killer rate, and even some potential assistance, which we'll go over here shortly when it comes to the down payment. So there's a lot that you have to go through to get to see if this program would work for you, but that's what we're here to assist you with. So if you have any questions about this program thus far, again, contact information right here, or feel free to book a call with us where we can discuss and see if this is a good fit for you. Now, quick bonus, we won't cover too much about this, but they do also have a down payment assistance program. So how does the down payment assistance program work? Well, it actually allows you to purchase this property where generally you're gonna have to put 5 or 10% down. You could potentially get 4% of that down payment actually covered in the form of this down payment assistance program. And essentially how it works is it's basically just a second mortgage that assists you, and you don't have to pay it right away. They actually will basically get their money back after you sell it. Of course, you can start paying it down if you so choose, but it is something that can help you even further, because what I've seen with a lot of my clients is what usually holds them back. If it's not interest rates, it's usually, hey, we don't have enough money or savings for the down payment just to get into the deal. So this is kind of opening that door, giving you another option, which can be really hard to find any kind of down payment assistance or even a second loan that a bank will offer. This program is giving you that option. Now, it's super important to make sure you're not over leveraged, and we're always here to assist you in that. That's why we'll help you crunch the numbers when we look at these things, but it's good to know that you have that option. Now, another benefit, another bonus, don't know if all the money's already gone, but for the first 35 people that apply for this program, they are offering upwards of $3,000 that go towards closing costs. So again, just making it a bit cheaper to get into the deal. I'm not sure if they're all gone yet, but again, feel free to reach out to us if you want to find out. So that's just a general overview of the program. Now let's go over what you came here for. What are the pros and cons? Is it too good to be true? Well, there is some fine print that you want to understand. So let's go over that real quick. Okay, let's go over the pros. Number one, lower interest rate. This is what I led with, and this is probably what I want to start with, because this is the thing that's going to make it most attractive, is that you are going to get potentially a lower interest rate, where currently conventional VA, we're seeing anywhere between usually 6.25% to 6.5% when it comes to the current conventional as well as VA rates right now. So being able to get a 4.95 or even a 4.65 can save you hundreds, if not thousands of dollars every single month and every single year. So that's definitely a huge pro. Number two, lower monthly payment. Again, this all translates. So as you have a lower interest rate, that means that your actual PITI, principal, interest, taxes, and insurance, your actual interest, which is part of that payment, is going to be lower, which means your monthly payment is going to be lower. So that can save you, again, hundreds, if not thousands of dollars every month and every year. The third benefit is helping with the upfront costs when it comes to actual cash. Again, real estate can be a challenge to get into because the down payment can be a big bear and a big knock to your pocket when it just comes to the down payment and the closing costs. But again, with that option with the first time home buyer down payment assistance program, it gives you a solution that if you don't have all the money needed for the down payment, that they can assist you with that. And of course, you can pay that down the road. The fourth benefit is this is a 30-year fixed loan. So just like any other loan that you would get from a bank, when it comes to VA, FHA, USDA, or conventional, this is not some kind of 15-year or 5-year or 7-year loan where you're going to get a surprise with a balloon payment just in 5 years. This is a normal 30-year fixed loan. So that monthly payment, that interest rate, that principal and interest is going to stay the same for the rest of its for 30 years. So it's fixed. The fifth pro is that it works with multiple products. If you're looking to qualify via FHA, USDA, VA, or conventional, there's 4 different routes you can go depending on which product works best for you. But there's a lot of different options, again, when it comes to this program and which actual loan you want to use. Okay, those are the pros. Let's get into the dirty stuff. What are the cons when it comes to this program? Because there's some things I haven't even mentioned yet that are super important to understand, especially when it comes to real estate. First one is the income limits. Again, you may be in a situation where you may make too much money to actually qualify for this. So again, if you look at the chart right here, there are some requirements when it comes to how large your household is and how much money you can make, and you can't be over that to qualify for this program. The second con, as we mentioned before, is there's some purchasing limits. So you have to fit inside the income box, and then you have to also purchase a home in a specific area that is not above the actual limits of how high you can go when it comes to that loan. The third thing is the ownership requirement. So there is some fine print that a lot of people don't explain, which is some of the requirements that when you get into these programs, they want to make sure that you don't buy the home and just sell it a couple of years later. They want it to be your home for as long as possible, and more specifically, generally 9 to 10 years. So this actually has to be your primary residence. You cannot rent it out for, I believe it's 9 to 10 years that actually has to be your primary residence. Additionally, you cannot rent out the property. You cannot turn it into an investment property until after you get past those 9 or 10 years. And the reason why they do that is, again, they don't want people coming in here, buying a property and then turning it into an investment property by leveraging this state program to help them create an investment property. So again, if you've got good credit, you've got good savings, you've got access to cash for the down payment, this might not be the best program for you. It might be better just to go the normal route, which gives you more flexibility on what you can do when it comes to rules and regulations. Like if you want to buy a property, live in it for a year, if you're VA and you want to turn it into investment property, or just live in it for 3 years and then rent it out, turn it again into investment property, that's mainly going to be the best route for you opposed to this program. But if you're looking to call a place home, again, for like 9 or 10 years, this could be a good option for you to get into the real estate space and have a place you can call home. Another con is that, again, if you are VA, it'd be better just to go the VA route, unless of course you're retired. And again, this is a place you're going to call home for a while, because you will not qualify for this program if you are active military. And the last con would essentially be that there is a bit more paperwork, because this is a federally backed loan. Anything when it comes to the Fed means more paperwork. So you're going to see basically the same amount of paperwork when it comes to a normal 30-year fixed mortgage if you go to a bank, and some, because they're just really double checking that you qualify on all these things that we went over today. So just keep that in mind, get your hand stretched out, make sure you got plenty of ink in your pen, and just know there's gonna be a bit more paperwork. And the last thing, and we can go a little bit deeper into this, again, if this is something you're interested in, because there's ways around it, but there is this thing called recapture tax, where they can actually take a lot of your profits or equity if you sell your property underneath the 9-year mark. So if you're going to sell the property, again, below 9 years, you want to make sure that you gotta, it's kind of tricky the way that you have to actually look at all the boxes. There's a bunch of different rules and regulations, and they all have to hit all at the same time. Again, this is better to have a conversation about it, but it is something that's important to understand, because if you are buying this property, you're like, yeah, I'm going to live in it for 10 years, and you don't, you just live in it for 3 years, and you trigger some of these other aspects, you could get hit with an extra recapture tax that could take any of the profits that you gained for selling the property too soon. So just keep in mind, this is really a best program for somebody who's going to live in the property as their primary residence for at least 9 to 10 years. Okay, guys, well, that pretty much wraps it up in a nutshell. If you have any questions about this program specifically, feel free to reach out to me. I got my contact information right here. Directly DM me on any of my social media platforms, or again, what I would suggest is book a call down below with the link in the description. With that being said, I'm Patrick with PatrickLongleyRealty.com, powered by eXp Realty. Hope you have a beautiful day. I'll talk to you soon. Aloha.